In this roller coaster ride of the stock market, where tech took a tumble and energy ascended to new heights, the ancient wisdom of the Yi Jing sheds light on navigating the volatile waters. The tech sector's fall, akin to the hexagram pi, encourages inner growth and preparedness for prosperity. Meanwhile, the energy sector's surge, reminiscent of moving with the flow of qi, offers opportunities in sustainable and renewable sources, aligning with the world's green momentum. Contrasting tales within the tech world, like Palo Alto Networks and NVIDIA, further highlight the importance of flexibility, preparedness, and adaptability. The Yi Jing's insights, when applied to investment strategies, remind us to embrace change, seek balance, cultivate patience, and pursue growth with empathy. In the end, the wisdom of the Yi Jing encourages us to view the market's ebb and flow holistically, understanding the interconnectedness of all things and the cyclical nature of fortunes. It teaches us to navigate market fluctuations with a calm and reflective mind, making decisions based on insight rather than impulse. And above all, it inspires us to align our investments with sustainable and ethical practices, fostering long-term prosperity while contributing to collective well-being. A thought-provoking perspective, isn't it?
Starting in the East, Asian stock markets have been a mixed bag of performances. The Japanese Nikkei 225 has soared, experiencing a surge of 2.13%. In line with this growth, the Shanghai Composite and Shenzhen A-share indices in China have also seen a rise, indicating a strong investor confidence in these markets. South Korea and Taiwan have held their own, showing signs of a steady economic recovery. For those looking to invest, the technology and manufacturing sectors in Japan and China might prove fruitful, especially with policy support and global demand potentially driving further growth. Shifting our focus to Europe, the markets are generally on an upward trend. The Stoxx Europe 50 index has risen by 1.50%, with Germany's DAX and France's CAC 40 also recording significant gains. This positive movement might be attributed to the easing of COVID-19 restrictions and supportive fiscal policies. For investors, European equities in the renewable energy and technology sectors could offer promising growth opportunities. However, keep an eye on Brexit negotiations and EU fiscal stimulus measures, as these could impact market dynamics. Over in Africa, the markets paint a mixed picture. The South African stock market index is up by 1.32%, demonstrating resilience amidst global economic uncertainty. However, Egypt and Morocco have shown slower recovery with only modest gains. With commodity prices stabilizing, African markets, particularly South Africa, offer investment opportunities in the mining and natural resources sectors. But do exercise caution, as potential political instability and currency risk could pose challenges. In the Americas, the Dow Jones Industrial Average has slightly increased by 0.13%, while the Nasdaq Composite has seen a decline of 0.32%. This shift underscores the ongoing sector rotation, with investors favoring industrial and traditional sectors over technology stocks. Diversification across sectors is recommended, with a focus on infrastructure, healthcare, and consumer goods. Additionally, given the potential for increased volatility, consider value stocks over growth stocks in the current environment. To sum it all up, the world of global stock markets is a complex one. Amidst the challenges, there lie opportunities. A balanced investment strategy that incorporates both growth and value stocks can be a sound approach. Stay vigilant to geopolitical developments, currency fluctuations, and potential impacts from ongoing pandemic-related uncertainties. Remember, diversification across sectors and regions is key to mitigating risks and capitalizing on global recovery trends. By strategically navigating through these trends and employing a disciplined investment approach, favorable returns can be within your reach. And so, the world of global stock markets continues to spin, full of potential and promise for those who dare to delve in.
Have you ever wondered if there's a way to combine the wisdom of the ancients with the modern world of investment strategies? What if the answer lies in the Yi Jing, a Chinese classic text that offers profound insights about life and the universe? Let's dive into this fascinating concept. In the Yi Jing, there are two key concepts that we'll explore today: pi and tai. Pi is a hexagram that symbolizes stagnation or a blockage. It's a moment where things seem to be stuck, but it's also a moment of potential where transformation can begin. Tai, on the other hand, represents peace and prosperity, the result of harmony and balance. When we look at the global market trends, we can see these concepts at play. Despite the ups and downs, the overall trend is positive. This mirrors the pi evolving into tai, suggesting that moments of stagnation or decline are temporary and can lead to prosperous conditions. From a Yi Jing perspective, the fluctuations in the MSCI World and AC World indices and the positive performance of the US index reflect the dynamic interplay of yin and yang energies. It's a dance of balance, a representation of pi and tai in action. Looking at the regional performances, there are more Yi Jing insights to be gleaned. The China index, for instance, shows a substantial daily increase amid a negative year-to-date performance. This could be seen as a pi moment where yin begins to yield to yang, indicating potential for transformation and growth. The European index, on the other hand, reflects a period of pi, where communication and flow are blocked. This urges investors to exercise patience and seek deeper understanding before making decisions. In the emerging markets, the mixed results within the BRICS nations and other markets can be interpreted as the complex dance of yin and yang energies within pi. This suggests that while some areas face challenges, others are poised for growth. From an investment perspective, the Yi Jing offers empathy and strategic foresight. The resilience of the US and Indian markets resonates with the Yi Jing principle of finding strength and opportunity within adversity. On the other hand, the modest and negative performances in the European and Australian markets suggest a phase of pi, urging caution and patience. The variability in emerging markets, especially the promising signs in the Philippines and China, aligns with the Yi Jing philosophy that within every situation of pi, seeds of tai are present. These markets may offer growth opportunities for those who can discern the shifting energies and act in harmony with the timing. So, how can we apply these Yi Jing insights to our investment strategies? First, by embracing the wisdom of balance and diversifying our portfolio. Second, by remaining vigilant to global shifts that could signal turning points in market dynamics. And third, by focusing on sectors that demonstrate resilience or growth, ensuring investments are made where the energy or market potential is rising. In the end, integrating the ancient wisdom of the Yi Jing with modern investment strategies offers a unique approach to navigating the complexities of the global markets. It's about understanding the dance of yin and yang, the transformation from pi to tai, and aligning our actions with the underlying forces at play.
Ever wondered what the ancient Chinese Yi Jing could teach us about the current bond market trends? Curious, isn't it? Let's dive right in. The current landscape of the bond market reveals a downward trend in AA-rated, BBB-rated, and BC aggregate bond indices. This is mirrored in the significant downturns in U.S. mortgage-backed securities. This trend reflects a market that's cautious, largely due to expectations of rising interest rates, which can lead to a decrease in bond values. The Yi Jing, the ancient Chinese book of changes, however, offers a timeless wisdom that can be surprisingly relevant to modern investment strategies. It teaches us that change is the only constant, urging investors to anticipate and adapt to market fluctuations. Take, for instance, the pi hexagram from the Yi Jing. It represents stagnation and obstruction. But when viewed from a different perspective, it encourages resilience and adaptability in the face of adversity. In terms of investment, this could mean adopting a cautious but proactive approach during market downturns. So how can we integrate these insights with our investment strategies? Firstly, diversification. Investors should consider diversifying their portfolios across various asset classes, including bonds with different ratings and maturities. This can help mitigate risk and take advantage of potential opportunities in a fluctuating market. Secondly, adaptability. Just as the pi hexagram evolves, investors should remain flexible, ready to adjust their strategies in response to market changes. This might include shifting focus towards sectors less impacted by interest rate changes or exploring alternative investments. Finally, a long-term perspective. The Yi Jing emphasizes the cyclical nature of change, suggesting that current challenges may lay the groundwork for future prosperity. Investors should maintain a long-term perspective, looking beyond immediate market turbulence. The integration of Yi Jing principles with contemporary investment strategies offers a unique and balanced approach to navigating the complexities of the bond market. By embracing adaptability, diversification, and a long-term outlook, investors can better manage risk and capitalize on opportunities even in uncertain times. Remember, it's critical to conduct thorough due diligence and consider professional financial advice tailored to your individual risk tolerance and investment objectives. As we conclude, remember to stay curious, open to new ideas, and committed to continuous learning. The discussion around Eastern concepts of heaven and humankind, Taoism and nature, and the balance between yin and yang can guide us in following the governing laws of the universe. If you found today's video insightful, be sure to give it a thumbs up. It's always a pleasure to share these insights with you, and your support means a lot. Until next time, thank you for joining us on this journey of learning and discovery.